Hello and welcome to another episode of Real Estate Analysis. If you don't know who I am, my name is Maxim Cruz, and back in 2011, my wife and I, we actually decided to delay our wedding in order to buy our first income producing property using FHA loans with a 3.5% down payment. That is right. If you didn't know already, you can actually use FHA loans to buy income producing property if you're going to live in that property. So again, my name is Maxim Cruz. I am a real estate broker as well as a real estate investor. And this channel is all about bringing you the information that you need in order for you to buy your first property or even your second property if you're gonna live in it using FHA loans with little down payment and start getting into the real estate investment world. So today we are going to be analyzing another property. If you're brand new to this, go ahead and check out the other videos that I've made talking everything from real estate terminology to some other, my story, sharing how I got started in real estate, as well as all the other analysis that are in this playlist or in this video section here. So let's get right into it. Before we do though, first, the disclosure. Again, my name is Maxim Cruz. I am a licensed real estate broker as well as an investor. I don't know what your scenario is, so this is for information purposes only. Again, go ahead and look at this information, but I always encourage you to meet with your local licensed professionals so they better know your situation. They can give you investment advice. Since this is not investment advice, this is for informational purposes only. Second thing, anywhere you are located in the United States, over the last 13 years, I have been building a network of other real estate professionals that can help you do this type of analysis, that can help you buy your first multifamily deal. So anywhere that you are located in the United States, I'd be happy to refer you to your local agent that can help you do this. And in this video, I'll point out some of the sections where the real estate agent can really serve your needs. So let's get right into it. Today we are going to be analyzing a property located at 2526 McKinley in Hollywood, Florida 33020. As always, I do give you the MLS number for full transparency. You can go ahead and look it up. A10807443. As of the making of this video in February of 2020, this property is listed at $349,943. Actually, an investor friend that I'm working with sent me this property today because it just came on the market and he has been looking for something like this. So, special thanks to Dave, and I'm doing this analysis for you and everyone else who is watching. So the property is listed at $349,943. As you see, the real estate broker kind of played around with the numbers here. I did do the research. I did do the comparables. It's a little bit over valued based on the other market properties that have recently sold, but I would say it's fairly there. It's not too much over. You'll see when we get into our offer price what my research was there. So right now, actually, it's a very interesting property. Let me read you the description. Great rental property or for owner occupied that wants the most of their mortgage paid for them. Front is a single family home with 2 bedrooms and 1 bath, large fence yard and in moving condition. Property is near downtown Hollywood, beaches, port and airport. For an owner occupant, duplex in back pays most of the mortgage. Duplex has its own large parking spaces and is totally separate from the main house and is on another street with a wide alley. Do not disturb tenants. Efficiencies can be viewed with an accepted offer. So on this unit, for example, on the 2-1, the owner occupied unit is actually a 2-bedroom, 1 bathroom, and then the other 2 units, they're studio bedroom apartments. So in this area right now, the 2-bedroom, 1 bathroom are being rented for roughly $1,250. And as always, we break it up into 3 sections. We look into a pure cash investment, then we look at using conventional financing with a 20% down payment, and then finally we look at owner occupied using FHA loans with a 3.5% down payment. So that's what we're going to do here. So again, for this 2-1 unit right now, it does say 0 in the disclosures. So I'm guessing that the owner actually lives on this property, and that's why they're stating 0 for that income. The other units, as you see, one is for $850, the other one is rented at $775. So let's jump into our analysis. The first thing that we do is we calculate income. So because a few of the people that have been watching these videos have been commenting and letting me know what they would like to see, I am now putting the vacancy in all of these. So I'll tell you exactly why. At first, I wasn't doing it because, again, typically when you put a vacancy number, whenever you look at larger properties, meaning like 10 units and above, you typically do want to have a vacancy factor of anywhere between 7 and 10%. So that is built in there. The second thing is whenever you're dealing with larger units, you have property management. So you have some management costs. These are much smaller properties, 3, 4, sometimes two unit properties. And again, this is mostly to appeal for that owner occupied, which you'll see why it makes a lot of sense. For the cash investor, there's a whole separate playlist that we talk about syndication, cash investments, etc., etc. But I'm still putting it in there so you could start to get your investor's cap on and start to remember that vacancy factor to put it in there. So what I've done here, and again, you can get a copy of this spreadsheet. You don't have to enter your email address. Just go down below, click the link right there. It'll take you to the Google spreadsheet. You could download it as an Excel spreadsheet, use it on your computer, or use it in Google Sheets, play around with it, put in your own numbers, do whatever you want. So how do you figure out your income? Again, you add all of these up, 1,250 plus 850 plus 775. That is going to give you your monthly payroll, your monthly rent roll. Multiply that times 12. That is going to give you your annual gross income. Then what I've actually done for the vacancy rate, instead of doing 10%, which would have been close to $3,000, I'm actually saying, okay, if this unit, the $1,250 unit, if somebody moved out for a month and then you had a month to put the tenant back in, etc., that would be my lost rent, okay? So I'm very, very optimistic on this unit. I'm saying it's only 1,250 is my vacancy, which puts my effective rental income, again, you want to remember these terms because then in the future it will allow you to speak that language when you're ready to start investing, at 33,250. Then what we do next is we add all of our expenses. Taxes are disclosed in the public records, 4,302. Insurance for the 3 unit is right around $2,500 in this market. Water and sewer about $600 for the year. Landscaping about $500, and then repairs, some minor repairs that might be necessary, about $600 for the year. That gives us our total annual expenses of $8,502. Again, this analysis is being looked at as a cash investment, so you have no financing. That number is 0, which gives you NOI, net operating income, of $24,748. And remember, how do we figure out the cap rate? Cap rate just stands short for capitalization rate. We take this NOI, $24,748, divided by $349,943, which is our purchase price if we pay full price for this unit. That gives us a cap rate of 7.07%. Now, one of the questions that somebody had commented on and asked me is, how do you figure why do you want to look at cap rate, not how do you figure it? The reason that you want to look at cap rate, it's just another measurement tool. Like right now, as of early Q1 of 2020, the average cap rate in Florida, where you're seeing multifamily properties being sold at, is between 5 and 6%. So again, anytime that you have a number that is higher than that 6%, you're saying, okay, well, one of two things. Either this property is actually underpriced for what it is, either some of the expenses are low, either some of the rental income is really high. So it just gives you that measurement, and that way it's a quick decision maker for an investor saying, hey, the cap rate on this is 7.07%. let's go ahead, let's put in an offer on this unit, or an LOI, a letter of intent, and let's do our due diligence and find out more information. So again, this is just a quick tool. As you see, this video is only 20-25 minutes long. It's a quick analysis to say, hey, let's get some more information, and now let's do our due diligence. Let's dig deeper. But on some of these, if the cap rate is 3% and your standard as an investor is, let's say, 8%, you're just going to discard and say, okay, let's move on to the next unit. Let's continue to do the analysis. So it's just a good measuring tool. Next, we have what's called a 20% leverage, which is using a conventional loan. Again, the income is exactly the same. Remember, what we're doing is we're adding the 3 units, multiply that times 12, and then we're subtracting 1 month of rent for a vacancy. That gives us that. All of our expenses are the same, so I was a little bit lazy today, didn't write it down here. And then the financing. So the financing, since we're putting a 20% down payment, it is $69,988.60, which gives me a monthly payment of $1,336.55 on that loan, based on a 30-year mortgage at 4%. So the financing, the total annual debt service for the year, $16,038.54. We take our income, subtract our expenses, subtract our annual debt service. We get an NOI, net operating income, of $8,709.46. And then the next number that we figure out, which is good, so you could start to learn kind of investment lingo, is what's called COC, cash on cash return. Essentially what this is because we bought the property at $349,943, but we put in $69,988.60, we are saying, okay, our net operating income is this number, $8,709.46. Divide that by the actual money that we put into the property. Our cash on cash return is 12.44%. So again, typically some investors, they have a cash on cash threshold that they measure, saying, okay, we want at least a 10% or a 15% cash on cash return. So again, this is just another measuring tool to see if this property fits your criteria. So now let's get into the owner occupied. So the owner occupied, I'm assuming that you're going to live in that 2-1 single family home unit, and then the efficiencies that are separate, those are the ones you're going to rent out. So again, there I'm saying you're going to have $850 plus $775, and then I subtracted $850, saying, hey, worst case scenario, one of those units is empty for a month. That's my vacancy. That's where I get the $18,650. The other thing here is the landscaping. Instead of paying somebody $500, since you live there, I'm assuming, hey, you want to save some money, you might cut your own grass, etc. So that's $500. And then some miscellaneous repairs if you have to, if you're not very handy, you have to call a plumber, an electrician, a handyman to do some things, about $600 for the year. So that gives me my expenses, and then we get into our financing. Because we're only putting down 3.5% down payment on this property, you will only invest $12,248.01, which gives you a monthly payment, which includes your PMI, your principal mortgage, your private mortgage insurance, $1,893.62. Multiply that times 12 for the year. Our annual debt service is $22,723.44. Next, we subtract our income minus all of our expenses. As you see, we have negative number. Red means negative. We have a negative NOI, $12,075.44. Now check this out. This is why it's good to do these type of analysis. Your monthly out-of-pocket in this scenario would actually be $1,006.29. So again, I forgot to do it in my introduction, so sorry. For the people that are following here, again, go and check out Denzel's link. Denzel is the king of velocity banking, and he's going to teach you how to pay off these type of loans much, much quicker. Essentially, what you want to look at is personal cash flow, right? This individual right now, if they are living in this 2-1 unit, they are paying $1,250 in rent. Now they're only will be paying $1,006.79 in rent $1,000.29 in rent. So that being said, they have a personal cash flow of $143.71. So again, before they were paying $1,250, now they're paying $1,006. That's the difference. So again, utilizing velocity banking for all of our Kingdom citizens, you know what this number means right here. That means you're actually saving money every single month versus if you were going to rent. Now, this might not excite you because this might not be a huge number. And again, your initial investment is $12,248.01. So then again, you could multiply those numbers and figure, hey, how many months is it going to take for me to recuperate my initial investment based on these criteria, right? And you can figure that out. But now let's take a look at this scenario. Again, the real good thing about using a real estate agent or a real estate broker is that they know the market. They understand the market. They can pull analysis data and figure out, hey, what's going on. So based on what's going on in this area, I actually found other 2 and 3 unit buildings that are selling between $275,000 and the $315,000 range. So I'm saying, hey, it's fairly reasonable to request an offer for $310,000 on this unit. Now, the other thing that I did was Unit 3, right now it's rented for $775,000. Unit 2 is really much the same condition at $850,000. So let's go ahead. When you purchase this unit, you're going to go ahead and raise the rent to $850,000. And what does that do, right? Check this out. On a cash scenario, again, you have $310,000. You're going to invest in this property. On a cash scenario, your income now goes up about $800 for the year. It's actually going up $900 for the year. No, is that right? No, it's going up $1,100 for the year, right? Which now brings your NOI, because we have a higher income. And again, I'm doing the same thing. I still have a vacancy rate of $1,250. So I'm saying worst case scenario, that unit becomes empty. Well, what's happening is, in case you don't know, there's 1,000. U-Haul is reporting that 1,000 people are moving to South Florida every single day. So again, that's why I haven't been putting some of these vacancy factors, but let's go ahead and put it in there. You should consider it. Anytime I do larger deals, I'm always thinking about it. So let's start to use it and put it in there for now. So now my income, including that vacancy, goes to $34,150. My NOI is the difference between my income and expenses, which relatively stay the same, which becomes $25,648. And now my cap rate goes up to 8.27. And the reason that it happens is actually my NOI is higher and my price is lower. So as you see here, when you invest and your initial investment is lower, and then over time your actual cash flow on the property goes higher, your cap rate can go up. So again, if you're measuring the market, you can kind of get to see, hey, this property is performing fairly better than what the market is actually selling for. Now, let's look at the 20% leverage. In this scenario, again, your income is going to be the same as this one. The NOI, now the debt service, check out what happens here. With 20%, your initial investment is $62,000 and your monthly payment is $1,183.99. That's about a about $150 difference versus the $349 number. So you could see what that $40,000 in principal that you're borrowing, how that can affect your payment, right? So now your NOI, you figure that's $11,440.12. And now your cash on cash, this $11,440.12 divided by your initial investment of the $62,000, now your cash on cash is actually 18.45%. What that essentially means that in about 5 years, this $62,000 that you actually invested in this property, you're actually going to recuperate 100%. And then again, you're not factoring in here other rent increases or other value add that you can put into the property in order to actually get that money out here. But now let's take a look at this. Again, if you don't know what velocity banking is, go and check out Denzel's channel. And again, take a look at this objectively from a personal cash flow point of view. We all have to live somewhere, so whether you're paying rent or whether you're owning an income producing property, and again, you're living in one of the units and the other units are helping you, assisting you in paying off that debt much quicker, this is what we're talking about, right? So now the income on this, as you see, it goes up from $18,650. In this scenario, it goes up to $19,550. Our NOI, we're still negative because we have all of these expenses. But check this out. The monthly out-of-pocket now is only $590.50. If you think about it, that's like $20 a day, right? So your personal cash flow now, instead of living in this unit and paying $1,250 in rent, you're actually only paying $590.50 in order to complete that mortgage payment, and you're actually saving, or your cash flow, your personal cash flow goes up by $659.50. And again, look up Velocity Banking, look at the power that you have here. You're essentially saying that you have an extra $659.50 a month to pay off other debts, to save towards whatever you want, to apply towards this debt if you wanted to, etc., etc., etc. You're also becoming a real estate investor. You know, you're taking opportunity, you're grabbing these properties and you're living them, you know, pretty much for free. But look at this, right? Check this out. So in FHA, you're only putting 3.5% down payment. At the 310 price, your initial investment is $10,850. Now do the math. If you take $10,850, divide that by the $659. So let's say you were actually paying that there, essentially in about, let's see, 10, 20, right about 20 months, okay? In 20 months, you would have essentially recovered your money back, right? Because now you have this extra money that you're saving every single month. So this is the power of FHA loans. This is why my wife and I, we decided to delay our wedding in order to do this. So finally, hopefully you enjoyed this video. Again, if you want any help with this, I am here to serve you. I'm here to help you. Over the last 13 years, again, I've created a list of agents that are qualified and able to do this sort of stuff. So again, I'd be happy to send an agent in your area that can help you do this. And what this is really going to give you is starting to think as an investor and start to say, hey, this is why, you know, at the $349 price, it doesn't make a lot of sense, but I'd offer you $310, and these are the reasons why. Again, you don't have to disclose those reasons, but at least you understand and your real estate agent understands. So again, just 3 things to wrap up. Number 1, go and check out Denzel's channel on how you can pay off any sort of debt faster utilizing Velocity Banking. Number 2, if you want a copy of this spreadsheet, there is a link below so you can go ahead and download it. You don't have to enter your email address. Start to look at property in your area. Start to play around with the spreadsheet. Put in your own numbers. Use it however you want and buy your real estate. Just invest and start doing what it is that you want to do. And finally, number 3, if you want, okay, if you want for me to put your deal up on this board, analyze this deal, we only need 3 pieces of information. Don't send me your address, okay? If it's a property that's off market and you're a wholesaler or you're trying to buy this for yourself and you're afraid that somebody's gonna, you know, swap this off the market before you put in an offer, etc., don't send me the address. It doesn't have to be on the MLS, okay? It could be off market. All we need is 3 things. We need to learn the sale price, so the price that you're looking to buy it for, correct? Number 2 is the number of units, which will actually give us the units, and the income that will give us the income so we can calculate what we have here. And then number 3, all we need is the expenses. So things like the taxes, the property insurance, the water and sewer, any sort of maintenance, repairs, etc., etc. All of those items, you know, if you send us those numbers, I'd be happy to put your real estate transaction up on the board and show you, hey, this is what these numbers are looking like. You know, I'm not sure what your market is doing. Again, I do have referrals in pretty much all across the United States. I'm not an expert in all of the United States, because that's truly impossible. You know, I know what's going on here in the sector of Miami, and again, I am licensed in Massachusetts as well, so I can talk about those areas since I look and study and live and drive and do things in that market. But again, in other markets, you know, I rely on other professionals that can help you with the resources that they have. But that being said, again, if you're saying, hey, this property, it's listed at $350, but I think I want to pay $325 for it, you know, we can go ahead and put these numbers on the board, and you can get to see exactly what the numbers are going to end up like. And then maybe you could just at least double check your math, or just have a second opinion and say, hey, you know, as a cash investor at the $349, personally, this is a little bit below my criteria. But at this number right here, to get an 18.45% cash on cash return, where I can invest this money and get 18.45% essentially return on my investment, this looks pretty good. I would probably do it. You know, from a cash flow scenario perspective, you know, this kind of makes a lot of sense here as well, et cetera, et cetera. So you get just a second opinion on what's going on. So hopefully this video has helped you. Let me know what information I can send you. Go and grab and download your spreadsheet today so you can analyze these deals. Go and check out the other videos we have. Continue learning about real estate. Start investing in real estate. It's a very, very powerful tool to grow your money, and also for tax purposes, a lot of other benefits that you have. So with all that, have a great day, and I'll see you on the next video.